Good morning, everyone, and welcome to GPA Trading Services live trading class on this Tuesday, April the 7th, 2026. As you know, today is Tuesday, Gary's Market Forecaster, GMF. It's the heads up on what's going down in the markets. But first, we have very specific rules of engagement. Those include the following. Do not trade with money you cannot afford to lose. Always trade with protective stops. Make certain the 4-hour, the 1-hour, the 30, and the 15-minute time frames align prior to trading with the MPA PE5 version 5.0 software. Also adhere to very strict money management rules, which includes never risking more than 2% of your entire account balance on any one given trade. For options friends, never risk more than 5% of your entire account balance on any one given options trade. And finally, all information provided by GPA Trading Services is for your educational purposes. So please give us a moment as we open up the charts. All right, ladies and gentlemen, picking up the dollar index on the monthly chart, high level overview. Wave 1 is done, working on a wave 2 down. At some point, Ian, James, Mr. Tucson, Harold, Allen, all of our archivers, we have wave 2 ending and we're going breaking out to new highs. Potential target probably a few years down the road is that 130 to 140 area. Question is, has this bottomed yet and we're going to break out, or are we going to get another push lower? Only time will tell, but until price proves otherwise, we need to break this resistance level, which is a former battle zone, turn resistance, turn support, been resistance as of late for the last several months. So we got to break that. Then we got to hit above that 102, which is where the short squeeze came in off of this high. They shorted the daylights out of the dollar. So if it can break above 102, we'll probably hit the short squeeze, popping it toward this next level 105. And that would be high probability if we hit the 102 short squeeze. So we've been talking about this for months now, but we did say almost 4 years ago when we topped out, we were going to get a deep retracement and it would be multiple points taking multiple years. And at some point it would end. Is it going to end here? Is it going to end to our original target, much deeper retracement, or somewhere in between? Well, we can look at this a couple of different ways. If we come back all the way back here to 2007, 2008 range, where we bottomed at 70.53, from that low up to 15-year later high in 2022, if we get a 618, be somewhere around that 87 level, a 786 retracement would be around 80. We were thinking more in tune of a deeper retracement, a 618, perhaps even push toward a 786. Somewhere in this zone is where we kind of discussed. Well, is this where it's going to go? Possibly still. I mean, price hasn't proven we're ready to go breaking out yet. But if we take this prior swing point low and we actually move that up to where this new area over here where COVID is, not my wave count, sorry, I didn't mean to move that. I wanted to move my Fibbo. But if we take this up for this prior low here or the COVID low here, we're already in that zone of a 618, 786 retracement. That's what I was thinking, 618, 786. But is it off of this low? Either one would work because we're right in that same ballpark. We use these two lows here, 618, 786 zone, or we're going to take it to the prior low where we talked about initially, coming way down here at 7.53 area. And is that the end? Well, we shall see. So we've been discussing this for many years now about a top and reversal to short the dollar. And we said, let's buy the euro dollar, pound dollar currency pairs because as the dollar declines, those are going to rally. And sure enough, it followed suit. So the question is now, is this over? Well, let's jump into the charting platform and we can see we're kind of stuck between resistance and support. This latest move down with this bounce stopping in this 618 zone kind of suggests we may need another flush. So even if you come back to the prior low, this potential is a 1, 2, 3, 4, 5. And if that is a 5-wave up, we could get a 3-wave correction, giving us further downside, and then potentially go bouncing higher. So key levels to watch, obviously, are this resistance zone I have painted with this pink box. We got this green line at the top of that pink box, which over the last several months, almost a year now, it's been a major resistance zone. We were kind of broke below it. We tested the zone, failed, tested it again, failed, finally broke above, and potentially looked like we were going to go breaking out, but we couldn't. We just kind of filled that little zone here. Then we retreated, tested it again, failed, tested it over here, failed, tested it, failed. So we've been testing it again. And yes, we made a slight higher high, kind of like we bounced over here and still failed. And then here we kind of made a slight higher high, failed. And now we're doing it again. So does that say we're definitely breaking out? Well, the key component of this is the longer term. I definitely think this big target up here, 130-140, is a high probability target. But again, it's going to take years to get up here. Just like when this reversal started about 4 years ago in 22, we talked about it taking years for this correction. So we're years into the correction. So far, so good. The question is this recent swing point low the end down here at that 95 and change? And we're beginning to build and break out. Well, we got several things on this chart of interest. A, if we can't break this zone and we don't hold the magic Fibbo, which is this big line right there, use my big cursor, it's this big orangey goldish color line. It's a typical magical Fibbo. We call it the magic Fibbo line because it acts as support and resistance depending if you're below trying to break above or you're above trying to break below. It'll be support and or resistance. And we can use a strategy we call the magic Fibbo strategy, where it gives us insight to where price is headed based on price's reaction in that area. And of course, we use our Fibonacci retracements extensions. So if we break down, and I still think that's a higher probability, we're probably going to break down, but do we make this higher low, higher high and go testing this big resistance magical zone up here? Or do we continue to break down, not hold support, and go on to another lower low? Well, we've been discussing that, like I said, for months. We got a low over here. We said based on price action, we'd make a new low. Then we come in June, in that area of June, July, when we started to bottom at a new low. We had a perfect 3-wave correction that went proportionate for an ABC correction. And we said the same thing. We're more likely going to break to a new low. We got that. On this low, we looked at this overlapping, chopping, grinding, laboring type of move. And we said, based on the way this price action looked, the corrective downtrend was still intact. This is overlapping, which suggests we're still correcting, so we're likely going to continue lower. We did it yet again. So the question is now, is this the beginning of that breakout, or is this just another failure where we break down? So critical levels to watch, or this basically 150 area, which is this green line. It is a big battle zone. You go across the chart, you can see it's a major battle zone going back in 24, over here in 23, and as far back as we can pull this thing, way back in 2020, we saw it was acting, even though it kind of cracked a little bit above, acted as resistance. So we've been watching this area for quite some time, and the more often we call this a major battle zone, the bigger and the better the battle zone means the more times it converts from resistance to support, back to resistance, back to support, back to resistance, the stronger and more obvious this is. But in the last 5-6 years since 2020, we look at a little snapshot, you can see it's been a very important level. So the more we try to break and we fail, then we come down and not hold support. That suggests lower low yet again, yet again, yet again. So I'm not convinced that we're definitely breaking out just yet. Yes, in the long run, I'm extremely convinced we're going to go up and make a run toward this 130, 140, but until price proves otherwise. So what is the skinny? What is the short on this? Let's give me the skinny on that. This is this big pink box up here. The prior high to low, it overlaps the 618786 zone. You take the all-time high from this recent move, not all-time high, but this recent high here down, and that's the 618 zone as well. So it's overlapping between this recent high as of, looks like January, mid-January of 25. We came down to this low. My 618786 is this pink box. You take the prior one going back to September 22, where we topped and reversed from almost 4 years ago to that same low. It still lines up with the 618 retracement. So in order for us to switch the gears and say, nope, you know what, my friend, that is it. That low right there is the end of this move. It's done. And we're definitely going breaking out to that 130, 140. We have to get across this big hurdle. We do that, then it flips the script that we're going much higher, years, not months or days, weeks, anything like that. It's going to take years to get up to that 130, 140. So I don't think this is a relatively quick type of trade that's going to play out. The question is, do we still need more downside? Even if we get more downside, including breaking this prior low over here, where we get that deeper retracement we just looked at, we're still going to go breaking out toward that 130, 140. So that 130, 140 target does not change whether we go breaking out now or whether we continue to grind lower for another year or so. It's not like a time restrictive. If we don't break down in the next 6 months and we don't go toward that target within the next year, then there's no way we're going to 130, 140. Nothing like that. We're going to 130, 140. The question is, do we break down further to go? And up and until price proves otherwise, we have to break this zone to flip the script. Right now, we use this, what we call Fibonacci retracements extensions. And from this prior COVID low up to the current high, we had this retracement, which I'll go to a weekly to show you a little bit easier on the chart. We had this bigger move, and I'll stretch it out so we can see that. And we had this bigger move from this low up from the high to the current low. The prior move into that move here, this is COVID over here, right in this area, and we rallied to this high, which was our target. Those of you that have been with our service for 15, 16 years since inception in 2010, and even before that had access, this was a move we projected to go up toward 115, 120, then it would have a big correction. It took, I didn't know it would take 15 years, but we talked about it, and sure enough, we got there. I'm still saying on the correction, we're in the zone. Yes, I still think we could possibly go lower, but either way, whether we go lower to our original target or we reverse from where we are, which is still not likely until price proves it, we're still going to 130, 140. So why do I think we still got more downside? You look at this low up to that high. Rule is you break the 618 and you get a candle body close. If we're looking at a weekly chart, we want to see a candle body on the weekly chart saying we're going close below it. You have a 75% chance you go to this 1.1448 Fibonacci level. It's not a true Fibonacci level. The 1.272 is a true Fibonacci level. This number is 90% of that 1272. And it's a magical level, even though it's not theoretically a Fibo level, but I made it one. Over decades of experience, this thing comes into play all the time. So based on that rule, from the low up to the high, you close below the 618 on a candle body, not a wick, then you have a 75% chance you're going to go visit the 1448 and about a 70% chance you're going to go visit the 1272. And price at this point closed below that 618. We have not broken below the 786, although we came close. This is right around 95, 94, 92, and we went down to 95 and change. So not far from that. You see that little spike right there, not far from. But what's the rule? You close below the 618, this is your likely target. You actually close below the 786, it reconfirms you're going to lower low. So if we do get the lower high, lower low again, and we actually get a candle body close below the 786, it's reconfirming we should make a move towards 85, 82 zone, which is right in that neighborhood we talked about on this bigger degree monthly chart within MetaTrader. And when we look at that, you can see that that's part of that 618, 786 zone off of that bigger move. That would put us right in that ballpark, 85, 82, right dead between the 618, 786 zone. See it? So this is why we've been talking about that for many years now, expecting the correction. So if we do break lower, which is still probable until we break above this, then we're likely going to see lower low. We see lower low, it reiterates we're going lower. Got it? So this is why I think more so chance of going lower still before we go breaking out. And remember the big picture. Even if this turns out exactly as we expect, we come down in this zone and then we start breaking out. It's going to take years, but eventually we're going where? 130, 140. That's this big target up here. So we'll have to slide this over because it's going to take years, and you can see years on this chart here on a weekly. We'll probably have to slide this little dude out here. So I'll stretch him out this way and then bring, obviously we're not going to go back in time to hit way over here. So I can move this forward and say, when would it happen? It could go faster, it could go slower. But on average, these big runs on the dollar take about 5 years-ish. So if this is the beginning of this breakout, which again, I still think we're probably going to go lower, and we run 5 years. So let's say we finish this in 26, maybe 27. We run 5 years, that put us somewhere around 32. So this kind of bubble kind of fits that scenario. Going to level that out a little bit, make it look better. But somewhere around that 130 to 140 area is where I definitely think we're going. So remember, even if we break down to where we originally talked about, we're still going up here. Even if this is the end of that, we're still going up here. But in either case, it's going to take years to get up here. So why am I still thinking lower low? This scenario here, that low, that high. We took that 618, we got a daily candle body close, we got a weekly candle body, we even have a monthly candle body that actually closed below that 618 level, which is still saying until proven otherwise, we're going down about 85, maybe down to 82-ish, somewhere in between, but these are a high probability target like this one is, until price what? Breaks this big pink box. Then it flips the script because right now, because of that move and the close below that 618, we have a 75% chance we're going toward 85, a 70% chance we're going towards 82, and that'll hold until, again, price proves otherwise. What would that mean? Well, if we go closing and break above the pink box here, now we have a 75% chance we're going higher high and toward that 117, 120 continuation. And I'm already telling you the next Fibonacci and extension level that's a high probability target is for this thing to grind toward that 130 to 140. So this level, the big pink box, is critical. That'll flip the script. The script right now is we should go lower low up and until we break above this area. Then we should go make a journey, which again will take years to get up there, but this would be the target, shorter term target, 117, 120. As we break out at 120, start heading higher toward that 130. We see 126 in the way, and then we start seeing our 129, 130, 140 area as you see these upper extensions. Fair enough? So let's drill down to the daily. What is the latest? Again, this is hot off the press. This is current ticking price action. And right now, this price action, even if this is the beginning of a higher low, higher high, we're eventually headed to that 130, and we're ultimately going to go breaking above our big pink box up here, which flips the script. This is expecting to go lower. Why? If that's that 5 wave up, we need a 3 wave correction. Is that part of the A, the B, we need a C. We likely see this come back toward the magic Fibbo. I got a couple of areas of interest. We break the magic Fibbo, highest probability we're going to go test this green box, which is the 618,786 of the prior low to this current high. So I'll zoom this out just a little bit so you can see the low. From this low up to the current high, again, these are always numbers you want to have on your chart. This is included with our software where we give you these Fibonacci levels in a system already built, not only in this charting platform, which is easily done, but we have it in NinjaTrader and MetaTrader 4, NinjaTrader 8. And I'll show you that in a moment, how you use the same extension with these critical levels. So are we going to break the magic Fibbo? I suggest we're going to make a run towards it. Yes, this could be the little correction here, and then we go bounce, potentially breaking out there. But if we close below that level, we're definitely likely going to get sucked and pulled toward the 618. This is critical support because, yes, we can move up. We can get a 618, 786 type of retracement, bounce, and go breaking out. So far, so good. So support, we have the magic Fibbo. Then we have this 97.50 down about 96.50 area. That doesn't hold, we're definitely highest of highest probability going lower low. 94.80, 94.17, could even push extremes toward that 92. So this is kind of the bubble we're expecting it to go. If this is wrong, then we could see a bigger correction that plays out where we hit the 102. Remember this level, 102, that's the short squeeze. If price closes above 102, expect this is going to make a run toward that 105-ish level. What is that 105 level? Again, it's magic Fibbo to magic Fibbo levels, and the critical ones are 618, 786 zones. And right now, on the smaller move, low to high, that's the support zone we dip to bounce. And then from the recent high to that low, that's the 618 pink box. And we're stuck between the two. But this recent price action suggests we're going lower low than this, aka magic Fibbo visit. And again, we close below that, then expect it to come down here. We don't hold this, we're going down here. To the upside, what if it holds and we break this all-important green line? Then we got extensions to the upside around that 101, but the main level to watch is 102. Again, in my humble opinion, we close above 102, we're going to hit the short squeeze, and we're going to go ripping. Doesn't mean it goes a day, like, okay, it closes at 102 on a Monday, then by Tuesday, we're going to rip 3 points in a day, or even intraday. Anything can happen, but it suggests we're going to make a move toward that 105, perhaps to that 107 level. And again, why is that level so important? As I've just been dictating and stating, that's the critical 618, 786 that flips the script. That we either go lower low up and until we break this, then that sets the tone. We're going higher high and going to start our multi-year journey toward that 130, 140 target. But this is where the rubber meets the road. So it's still possible from this recent move, we do a bigger type of correction and we still hit the short squeeze. We go running into the zone and get rejected. We have to clear this hurdle. We clear that, then it says multi-year grind and move toward that 130, 140. So those are your critical levels. And then to the downside, because this recent price action suggests we still need more downside, is the magic Fibbo first. So back to the daily, magic Fibbo, this level. So I would not be shorting, going long the dollar at this moment. I'd look for this thing to come down at least to the magic Fibbo for that correction. Again, if it doesn't hold there, expect we're going to go a few more points lower and test this 95.5, 96.5 zone. And if price continues to close below this area, then it's game over. We're going lower low, and that's going to put us in the 94 to low 94s, maybe even push us toward 93 to 92 area. That's this target. So a higher probability at this juncture is not only do we come down to magic Fibbo, but if we close below it, expect a continuation to head to this box. Yes, we could bounce and go ripping higher from that point. It doesn't mean we close below the magic Fibbo, we hit this box and we bounce, then we definitely going to go breaking out and make a move toward that 105, 107. That's 102. We close above that, we're definitely going up there in my humble opinion. But the reason I'm calling your attention to what if we retrace here and start bouncing, is it guaranteed we go on 102 and higher? Maybe, but notice what happened the last low over here. We had the same type of move. We did a beautiful move up. We did a perfect 618 retracement. So if I run that Fibbo from this low up to that high, which is like a double top here, it's a perfect 618 retracement. See my 618 right there? Perfect 618 retracement. It bounced. But guess what else it did? The bounce was fine, but it ran into the magic Fibbo and failed, so it went lower low. But look how often these levels hold. Not only did this run up, retrace, and bounce off of 618, but that prior high down to this low, we went right to the 618 on the upside and failed. So what are we doing right now? Well, we got the run up, and we're stuck between the recent low to high support of 618,786. And from the recent high to this little dip, we got resistance at the 618,786. These levels come into play not just on the dollar index, but on stocks, futures, commodity, ETF, treasury, cryptocurrency. It reverberates in cycles in all asset classes. Even if they create some new asset class, these levels will be critical. And the magic Fibbo is going to be critical. And our software that sets up with all these built in sets the same thing. So I still think we're going lower. So expect the euro dollar and pound dollar to grind higher in the coming days, and expect this is going to break down. We don't hold here, we go visit the support zone. We don't hold that, we go lower low. Now, inverse relationship of the dollar index. Dollar index is made up of a basket of currencies. Most predominant currency in that basket is the euro dollar. You go to your euro dollar. We're stuck between support and resistance, and the bias is the dollar starts breaking down, which is high probability. We're going to get the dollar to break below the magic Fibbo. This euro is going to break above the magic Fibbo, and it's going to make a run toward this pink box. The dollar, if we break below the magic Fibbo, I said it would run toward that support zone. Well, this is going to do the inverse of that. We break above here, we're going to go to this resistance zone. What if we break that? Then we're going higher high, and your targets are 121.70 and 122.60, 159 area. That's high probability. And the reason I'm still more bullish than bearish on the dollar, as far as the euro dollar, is the same reason I'm more bearish on the dollar index. Is you come back to the euro dollar, and this recent high occurred back in 2020 to the recent low over here in 2022. We broke the 618, and we even took out the 786. So way over in this area, we confirm we have a 70% chance, a 75% chance we can go visit 127.40 area. And we got a 70% chance we'll go visit 130, 131. That's according to this bubble up here. So up and until price proves otherwise, we would expect we're going to grind higher in the weeks and months to come. Maybe might take even another year. When this thing bottomed, I made a bold statement. You'll hear everybody, the weatherman, everybody, every Tom, Dick, and Harry, every who's who of anybody and anything. My prediction, my prediction, my prediction. I'm a God-fearing Christian, and I have a God-given talent to read and interpret price on a chart. And this ability has been given to me, and I use it to help others pay it forward. So this technique works. Is it 100%? No, nothing's 100%. But if you continually get in 75% likelihood trades versus 25% failure, you're going to be a successful trader in the long run. Proper money management, you can win 25% of the time and still make money. Even though you lose, you got to use proper money management. We go over all that. So in closing, from that high to this low, we broke the 618, broke the 78. So this is extremely high probability targets until what? Price proves otherwise. So you notice the same kind of thing. You take this low in 2022, I didn't make a prediction. I just made a bold statement. I can anticipate with the best of them. I leave the predictions to the prophets, and I'm not a prophet. I don't even play one on TV. So this was a high probability. I made a statement saying you will make thousands of pips over the next several years, as this is expected to make a retracement and then ultimately go lower low. I still think we're going lower low eventually. When the dollar makes a run toward 130, 140, this euro is going to make a run toward the 0.8s down in this zone, maybe even a little bit lower, depending on, does the dollar push 140? Then we're probably pushed down in the 1.7, the 0.7s or so down here. So this is long-term high probability target, but the question is, how high do we go before that reversal occurs? Will the dollar go lower? If the dollar goes lower, the euro goes higher. It's that simple. That's why we spend so much time on what the dollar does. It tells you where a lot of asset classes are going. And because of this scenario, this is extremely high probability targets. And just like we said with the dollar, from the low to the high, you can see the big dark level down here. That's my 618786. From that low up to that high gives us these numbers. So we break below that, then it says highest probability this correction is over and we're downtrend continuation toward this bigger target down here. But we have to break this support zone. Up and until then, this is a higher probability target up here for now. So either price is going to break the support zone saying we're going much lower, or we're going to continue to grind and go higher to reach these targets. So that's the critical zone. So you kind of do the same thing what I did on that pink box. You stretch this thing out into infinity, and you can see why this is such an important battle zone. On the way down of its decline, it held for many years and months, bounced, and then we grinded in here and made it to the next level, grinded till we went down, and on the way up, kind of chopped in that zone. We've been chopping in the zone for quite some time before we broke out again. So that's that same pink box on the dollar index where it's located of support zone for the euro dollar. Got it? So again, that bigger picture, you keep stretching this thing out and you go, wow, I've never really looked at this, but this is incredibly important zone. That's right. It dictates whether do we go higher high before we get this lower high in the big picture to lower low, or do we stop in the zone and break it now to go lower low? It doesn't matter. Ladies and gentlemen, whether we do reach the deeper retracement we originally talked about, we're still going down here. Or if this is the end and we start breaking it down now, we're going down here. Just like the inverse, the dollar goes breaking that same pink box, we're going to that 130, 140. Whether the dollar goes lower first, we're still going to 130, 140. Well, this is the same. Whether we go higher, we're going to this 0.8 or lower. Or whether we kind of chop and end here, we break it, we're going to 0.8 or lower. It's a given, in my humble opinion. So there you have it. Let's keep going. We'll go to the markets. Pound dollar is exactly the same thing as the euro. It's the same. You got your currency pair here, dollar in the secondary position. So when the dollar is weak, this goes up. When the US dollar is strong, this is going to go down, and that's just the way it works. So why are we thinking that this still needs a higher high? Because the same rule we just showed you. From that high to this low, we took out the 618 long time ago, way back in 23, we did that, pull back. Then we tested the 786, pulled back. We broke above it multiple times. And this says we're going where? 147, 152 area. So the Fibonacci said from this move down, took out the 618, we're going there. We eventually took out the 786, reconfirm we're going there. And where's the big flip? We have to get below this to call it ending. This is off the table when we take this out because we're going lower low, and the pound is going to go into below parity and have a target down below parity. So this is simply a correction in a longer term downtrend. And we're not expecting this ever. Back when this was 103, I made a bold statement again, go long the pound dollar. It's going to make you thousands of pips over the several years. And then when it gets a certain point, we're going to get a lower high, then a lower low. So we'll be able to short this thing down. Well, I was shorting the pound dollar a decade plus ago. When we reached this all-time high up here, I said the same thing. The pound is going to make a move to the teens. I thought it would get to the teens, and when we reached the teens, I was kind of thinking, well, this might be the bounce I'm looking for. We got a pretty substantial bounce from the teens here up to 142. That's several thousand pips, but we ultimately got this. So when this happened, I said, this is an overshot. It's an overkill, and it sets up a much deeper retracement, tallying thousands of pips. So what are we looking for the pound? Well, my target is 149, 152, but I was expecting about a 50% retracement. Not quite as deep as the 618, but somewhere between the 618, 786. But this pink box is always going to be, in every chart I look at, 618, 786 is critical. So what happens if this were to flip and take that out? We're going all-time highs. I don't see that in the cards. Not even close. I see this as corrective for another continuation down, not a reversal to go high. So even when I made that statement almost 4 years ago, it's going to go up thousands of pips and take multiple years, but by no stretch of the imagination are we going breaking all-time high. We're just getting a simple retracement in the mix before another lower low. That's the big picture. Euro yen, pound yen, be careful on these rallies as of late. Still looking at less than desirable price action because of this recent correction. This is overlapping. This suggests we're still not ready to go blasting off to infinity up here. We're going to get some sort of bigger retracement. So we've been spot on these retracements so far. If you're long on this, you're up a little bit, but good. Then I would definitely be taking profits because all we're doing is testing that resistance zone. We close above this candle body, not a wick, not a little wick up here, and we close below, but we close above that pink box, then you could focus a couple of hundred pips higher. So we're around that 187, 188. But this does not look like trend continuation. This looks like more corrective. Same thing with the pound yen. This still looks corrective. And what did we learn about this latest move? That looks very impulsive. This is overlapping and corrective. This suggests lower high, lower low, still to come. And if you look at the financial crisis in the past, this pound yen pair typically plummets where the yen strengthens. And this was the bold statement I made way back. This is in our archives. Back during COVID low over here, I made a statement saying, look, there's an opportunity to go long the pound yen. It's going to go up 8 to 10,000 pips and take several years. And then we can look at taking some profit. Well, we ran into the carry trade unwind back in 2024 when this thing plummeted like 2,700 pips very quickly. But my anticipated move, everything but a prediction down here, we were going to go and break that high which was in the neighborhood of 8 to 10,000 pips. Well, guess what? That's exactly what we did. And since that correction, start to zoom in on that, we'll go to a 3-day, and I can zoom this in a little tighter. This looks very impulsive. Look at that drop. So after this big run up, multi-year run, exactly where we said it would go, way in advance, we got this pullback. Since then, this low, we got a lot of this chopping and overlapping, and a lot of people look at this saying that's very bullish. But if you look at the bigger degree, this higher high looks like an expanded flat correction, which still suggests we're going to come back down toward 180, maybe 185 area before we're done. And if we run into a financial crisis, we could get this thing to plummet thousands and thousands of more pips. And what do we mean by that? We'll go out to the weekly chart. Actually, let me go to the monthly. And this shows you the financial crisis, dot-com bubble burst. This thing plummeted about 9,000 pips. In the 2007 financial crisis, this thing plummeted over 13,000 pips. And the next big financial crisis, what's it going to be? It could be oil prices pushed to 150 to 250. And if it pushes to 250, inflation's going to get out of control and we're going to have a financial meltdown. And that financial meltdown, we show in history, this thing tends to tank. So maybe we split the difference. 11,000 between 9 and 13. Maybe we do 11,000. That would push not only that 180, 185, but thousands of pips lower than that. It could push us all the way down to maybe 125, revisit these lows. Anything's possible. So am I trying to tell you we're definitely going way down here? We get a financial crisis. History has shown this thing sells off hard. Are we getting a financial crisis? It's inevitable. We have over 5 trillion in debt. We got all of this same shenanigans the market's playing, where you got the big hedge funds that allow to use your premiums to your retirement plans, your pension plan, and they're investing in questionable investments, and they're unable to meet their, a lot of these big funds wanted money, and they said they wanted their money out, and they could only give them like 1% of what they requested. They're unable to give their money. That's their money indefinitely, etc. A lot of this cracks in the foundation. I digress, but it's coming. Those fans that are watch the Fred Sanford and Son, when Fred G. Sanford would do his little, Elizabeth, I'm coming to join you, honey. Here comes the big one. That's what I'm calling the next financial crisis is Elizabeth, I'm coming to join you. And it could be as soon as late this year, early next year. The cracks in the foundation are there. It's inevitable. It's not a matter of when, not a matter of if, but a matter of when. I know I digress, but this thing should go plummeting lower. But this latest price action suggests we should get a lower low, and this one off the daily. Latest correction in this overlapping suggests we should get a lower low on that. So that would put us toward the magic fib on this daily chart, somewhere around that 206, 207 level. Just make a new lower low. And if that doesn't hold, we got some more support zones. And we look at this bigger picture, we should come back to this low right around that 180, 185. All right, let's move on. Onward and upwards. SPX still looks like we're in this chop, overlap, grind zone. So I would watch some key support, those that trade this. We're hitting resistance. We've been tapping in this for a while. This looks like it's developing into a smaller A, B, C type of correction. So I'm going to show you where some targets are. 6,800, where I think we're grinding, but we have to hold support. We don't hold a critical support zone, then we should go lower low. But this grind, we talked about this dip. We expected it. We needed to see it. All of that bigger grind. So let me start out with the bigger picture on the daily. And we'll look at the futures as well. But we had this initial move, Liberation Day coming down into that push. Then we had this over here was Liberation Day, and then we started to bounce. And we said that last year that we needed a lower low because this overlapping chopping action. We got our lower low. I called for that for weeks and months. Even during this period when it would rally, I said, sell the rally, sell the rally, sell the rally, sell the rally. Kept calling for it, kept calling for the lower low. We got it. Now, this correction, I do expect more upside, but it's going to be chopping, overlapping, just chop fest, up, down. So the key is when you're short, you take aggressive profits. If you're long, you take aggressive profits. And this is not try to buy and hold for months or sell and hold. This is more not so much intraday necessarily, but quick draw McGraw type of trading, because this chop fest is going to continue. So we got several things we need to watch. The recent low and this recent high we've been grinding, which we suggested. We looked at our seasonality. Seasonality, typically we get the dip into March, coming into April, and then we get a rally in April, May. And then I'm going to look for this rally to probably terminate somewhere around that 68 area-ish up here. What are we looking for? We're looking for, we have a steeper downtrending line we're testing. Kind of look like we're going to break out, but we're still testing it. Then we have this degree line over here, which is another lower high downtrend before we did get the lower low. So I suspect we're going to eventually break above this magic Fibbo, and we're going to make a grind toward that 6,800 level. That's where that comes in. In the interim, what's critical on the downside? We'll drill down to like a 15-minute. This is where we show potential upside targets and potential support zone. This recent low up to that high, this critical zone is around that 64-ish area. If we can't hold that, we're going lower low. But if we hold that, then we're good to go. So I'm not trying to tell you we have to go test this. I'm just giving you the support zone on the bigger picture. Then you look at the most recent move, which I'll run it from here, which is same area, even though we did make a slight higher high. But I use a 3.2 from this low up to that high to this higher low so far. So if this is the beginning of that correction, and this is my A wave, that's my B wave, where should my C wave end? Up here around that 68. See, 67.75 up to around 68.50. We would expect this to grind in the next several days to weeks, probably as we go through April into May. And I don't mean every day we're going to grind up. We're going to chop. As long as we hold this support zone, that 6,500 basically down to about 6,400, as long as we hold that, then we could still bounce off of that and still make its run up here. This looks like, for those of you that like ABCs, Elliott wave, etc., that looks like the initial A wave. This little three-wave correction looks like the B wave. And we're working on a 1, 2, 3, 4, 5 type of move for the C wave. Then I expect we're going to get another push lower. What is that time frame? This should chop and grind as we move into, say, April, May. And then we get the bigger correction going into the fall. And then as we get into fall, I'm looking for a Santa Claus rally, maybe into first quarter next year. And we make all-time highs, reach a bubble. Then we get the bigger correction, whether it's Elizabeth, I'm coming to join you, honey, or just another massive correction. That's the big picture. And we're doing the big picture in this example off a 15-minute time frame. So where's the high probability target we're going to grind to over the next several weeks, maybe April, May? That's in this zone up here. So I'll put a little box up there in this zone up here. Again, we're talking a few weeks. So somewhere around that 68, 60, upper 67 to maybe upper 68s. Maybe it pushes towards 69, but I am not looking for an all-time high. I'm looking for this grind into April, May-ish, probably May-ish, to make a lower high. Then we kind of, and that's what that little trend line we showed you off of that other one, kind of intersects in that zone. And then we get another push lower into the fall. And then we start another rally into the end of the year, maybe first quarter, where we go bubble hunting. And I'll go to ES because I already have all that on the chart. I'll go to my daily. And yes, ES and SPX are obviously the same entity, but it's a little bit different in pricing. Right now is about a $50 difference between SPX, 40 plus, between $45 and $50 difference, SPX and ES futures. But the same rule, look at this. We're testing this much steeper slope and decline. And it looks like it's trying to break out, but failing again, kind of like we showed on SPX. But I suspect as we go through April, May, and grind, this thing is going to grind somewhere toward that upper lower trend line, put us somewhere around that 68-ish, maybe 69, this big resistance box up here, where I would expect we're going to ultimately chop and grind and work our way probably into May, then get flushed down here into, say, the fall, and then get another big rip into end of the year, Santa Claus rally, maybe first quarter, and we go bubble hunting. And what does that look like? I got to kind of compress this to bring it into play. This is a conservative target, all-time high somewhere around that 73 to 76, 77, maybe 78. And what if we get that bigger decline? Now, this is something I'm looking for the bigger picture. Go to your weekly chart. Magic Fibbo is critical. From this low up to the current high, even with the rally I'm talking about, lower high, lower low, we ultimately get a retracement toward this Fibbo, which is sitting at a 618 retracement since the Liberation Day low to the grind higher. We get a retracement to visit the Magic Fibbo, which is also sitting at a 618. We call that a combo bounce. 618 bounce suggests we're going to go to a 1448, 1272 type of move. Well, if you can get that combined with the Magic Fibbo at the same level, it typically can work out to where you get a 1618 extension off of that. So this is conservative. And this would go higher to these extensions, maybe into the 8,000s, maybe even push into the 9 before Elizabeth, I'm coming to join you. So I'm not guaranteeing this is playing out. We got to get this retracement to bounce off of this. Then we got to break out. Then it sets the tone, conservative numbers. Then this could be more aggressive numbers. And either one's going to play out. My humble opinion, we're definitely going to make all-time highs again. I don't see them coming into late this year, if not maybe early next year is the plan. Short term, drill down to the daily. We're expecting, based on this price action, that based on seasonality, we're probably going to grind to a lower high and then push into the fall to a lower low. And then we're going to go blasting off into late year, Santa Claus rally into next year. So what are those targets? I would personally love to see my weekly Magic Fibbo come into play. So we April, May, chop and grind and grunt to a lower high somewhere around that 68, 69 zone. Then we drift lower into the next several months into fall. And depending on where we go, do we go to the weekly? Do we go to the 3-day Magic Fibbo? We already hit the daily and moved below that we talked about. We got what we needed initially for that initial bounce. But when we go lower low, is it the 3-day? Is it the weekly? See that box right there? When I do my 3-day, that's the 3-day Magic Fibbo. This bigger box is the weekly Magic Fibbo. I personally would love to see a rally, lower high, lower low, get down in here, maybe the 6,000 to 5,800 zone, where my Magic Fibbo sitting on a weekly, which is a 618 type of retracement, right? That would set up potentially not only all-time highs, but could blow past our 7-ish thousand all-time high to push into maybe the 8,000s, or if it really gets spicy and juicy, we could go maybe into the 9,000. I have a method of reaction to how do I know if that's going to hit here, we're ready for the bigger crash, or do we get to the extremes and we're ready? That is what we look at as a barometer. And that barometer you can get for free on Bar Chart. It is their heat map. So you go into market performance on Bar Chart and you look at this heat map. This is the critical number. How many companies of the S&P 500 stocks are sitting above their 200 moving average? When that gets to 80 or even pushing 90, that's when you know the market is ready to have a big correction, whether it's truly a market meltdown, financial escapade, or just a hearty, healthy retracement. You get to the barometer and it's a oscillator. So we can look at these, for example, and the last place we touched was down here at extremes. 20 and lower is extremes, look for a buy. 80 and higher is extremes for the market to correct. And this baby is an oscillator. It goes back and forth, back and forth, back and forth. Last place we touched due to the Liberation Day, I expected this pullback. Even if we go toward the weekly, which we're talking about, we kind of grind higher in April, May, then we get lower low as we push into the fall, then we go breaking out. How do I know that, say, 74 to 76, 77 conservative target is the end, or are we going to push to those extremes to 8,000 or higher? First thing is we retrace back to that weekly target, bounce, and go breaking out. It's a matter of when this gets to 80, 90%, like over here in 21, what happened? A big correction. And then we use this going back, and it doesn't go all the way back, but you can see right in the financial crisis, we were at extremes, and what happened? Big correction down. And each time you get to the extremes, we use this as a barometer along with my chart analysis and the software, et cetera, et cetera. So what are we talking about software? It's simple. It's just the MPA magic software that we go into and we look at this on any scale. Looks like my chart's a little slow today. I got so many open, but I'll go over here to NinjaTrader and I can show you the same thing. That is this magic Fibbo. Got it on the chart, and I'm going to go in and add my templates, which comes with the software. All these are pre-fabbed, and we get the software. This is why that pound yen trade, I'm looking for more downside. I'm not interested in this breakout right now. We discussed that already, but I'm looking for this weekly in the weeks to come for this to cycle down, and any big rally should be sold and look for this to push lower. Even if it's a smaller degree, we're talking visiting the magic Fibbo on the daily chart. And if not, and it ends up being this bigger one here, ABC, then we're talking coming down at 180, 185 zone we discussed earlier. But this suits well with the weekly cycle down. And what is that going to take? It takes about 3 to 5 months for a weekly to cycle. A monthly takes about 3 to 5 years to cycle. And this is useful for options traders. My daily takes 3 to 5 days, 3 to 5 weeks on a daily, the weekly 3 to 5 months, the monthly 3 to 5 years. So it's a formula that we can use for options trading. So if I get a daily I know is going to cycle, then I can do options, push out 3 to 5 weeks. And I can utilize that to my advantage. I digress, but you get the point. Doesn't look like a whole lot, but the software with the magic Fibbo, the built-in. We also have the drawing tools we talked about with the same magical levels. That's already built in when you put the software on. You get the high, you get the low, you got the 618, you got the 786 built in. On your extensions higher, you got the, that's a 2.2, 1448, 1272, 1618. All those we show you on the charting platform, on NinjaTrader, MetaTrader, all these are the same levels. It's there for your ease and convenience. So be careful with this. This latest push down and this overlapping price action suggests lower low. Lower low means we're probably going to go toward that daily magic Fibbo, right? There's the daily magic Fibbo. We could bounce off of that and go higher, but I'm expecting this to disengage, push lower, which will cause the weekly to do the same and start pushing lower. And eventually, when my daily gets oversold, it's going to slingshot lower and lower, like we did here, slingshotting higher and higher and higher as that weekly was cycling up, targeting that. Got the correction. Now we're looking for the reversal. So be careful on anything. If you're long, thinking this is breaking out, be sure you're in a position of authority, because I do see this thing fizzling out and pushing lower more than I see this thing breaking out. All right. So let's finish up. Go back over here. And that's the level I want to watch. What happens if we get to this conservative target on ES? And we're seeing that 80-90 zone over here, pushing the limits above 80 toward 90, the higher the better. Then we'll look for us not to go up into the 8,000s and higher. But if we're still pushing that 75 to 7,800 and we're just pushing near 80 or so, we could potentially push it toward 90 or higher, and we're in the 8,000s. Whenever I get to 80, 90%, I switch my mindset to be taking profits. When everybody else is greed looking to get more, I sell in the midst of that and take my profits. And then, of course, when it's all doom and gloom and there's blood in the streets and everybody's running for their lives, that's when you boldly step in and do a little buying. But I want to see it, my software extremely oversold on multiple time frames, and I want to match it with this barometer being 20 and lower. The lower the better. What happened back in 2009 after the big financial crisis, this thing went to extreme. That was screaming the markets were going to rip. There you have it. And then you use that same heat map for all the indices. So what am I looking for when I think it's Elizabeth, I'm coming to join you, honey, or at least a massive correction? This guy on the SPX, how many comes 500 above 200 moving average, pushing 80, 90%. You come down here to the Russell, pushing 80, 90%. You come in Russell 2000, 80, 90%. You come down to Dow, 80, 90%. You come to NASDAQ, 80, 90%. And when all pushing that, so how many of the 100 companies, 80+%, 90% of them are above the 200 moving average, that's when it's time to take profits and run. So when we see that, it all depends where we are in the chart. If we're pushing this and that's there, then I'm looking for a big reversal. If we're pushing extremes and we're there, then I'm really looking for a big reversal. The higher we go, the further we can fall, but it's not going to be a pretty type of correction. It's going to be ugly and gnarly, and could be what we're looking at, this big, big, big picture from that 2009 low to the run. We're talking at least a magic Fibbo on a monthly chart. We hadn't visited the monthly chart since way back in maybe 2011. We touched it barely after we were recovering from 2009 low. But what's interesting, we never had a 618 retracement since 2009. Never at any point did we get a 618 retracement. That's what's screaming we're coming to visit. Elizabeth, I'm coming to join you, honey. We're talking a massive type of correction. I don't care if we go to 8,000 or 9,000, it's still likely going to come visiting this magic Fibbo. Amen. And from that low to that high, that's about where the 618 zone would be roughly located. Fair enough. You can kind of see the number right there. That's what it's representing. So we're talking from this big multi-decade run from 2009, 19, maybe I don't think we go to 29, but you get my point. And we're looking for a big retracement, big one. And who's to say we stop there? We could even come back, and people think this is impossible. There's no way that that can happen, but we could come back to this breakout zone from the dot-com bubble burst into the 2007 financial crisis. And we've been running higher ever since. AI bust, whatever it's going to be. 5 trillion in commercial real estate. A lot of things can all add up, and the cracks in the real estate here, there, and debt, consumption, all these credit card debt, you name it. This thing not only could come to this, but could even come as far as retesting that level. And you go, there's no way it can go from 8,000 down to about 2,000. Oh, yeah? I've seen it, and it can happen. So be careful. So in the short term, again, ES, NASDAQ, they're all in the same boat. Expect a big retracement when Elizabeth, I'm coming to join you, honey. In the short term, we're looking for this chop and grind. And yes, I do think even the NASDAQ that's been beat down as of late is going to reach all-time highs before we're done. But the question is this the bottom and we start breaking out now? I'm still looking for what we called for the last several months. The NASDAQ, unlike ES, went on to make a new high, all-time high. NASDAQ did not. And ever since this point, I kept calling for any big rally should be sold, because the inevitable measure is we need to go down to this target zone. We need a lower low. Because of that initial move looked impulsive, and all this overlapping chopping action suggests corrective, and we still needed a push lower. The question is, was that low enough? I'm not convinced that this low is going to lead us into a breakout to all-time highs yet. So I do think this thing's going to chop and grind April, May, then come down into the fall. How much lower do we go? Looking for a lower low than that recent one, lower low. And we could even push to what? The magical weekly magic Fibbo combo meal bounce, like we just talked about on ES. And you can see as I bring this into perspective, from the recent low up to the high, that's 618, right where the magic Fibbo is. So is this possible? We can foresee the future where we just kind of chop and grind up to a lower high. And we got that lower high here, and we got a more severe lower high, but we chop and grind somewhere around that 25-ish, maybe a little bit higher, like, ooh, we're going breaking out. But then we end up with yet another lower high, lower low, and we go from, say, May, June, July, summer doldrums, maybe we go into early fall, and then we come testing this little magic Fibbo, then we go blasting off to the stratosphere. So that's kind of the plan. So in the short term, be careful. Some critical zones to watch. We're below the magic Fibbo on a daily. That's still bearish, right? Even though we got the lower low that we were looking for, this price action suggested we need a lower low. We got it. I was very bullish on the bounce, but I also said I don't think this bounce is going to go breaking all-time highs. Again, you kind of keep fine-tuning this. You get your lower high up here, and then we got a more severe lower high trend line there. And then trend lines are the weakest of your technical analysis, but they are important. Magic Fibbo is very strong resistance at the moment. I do think we're going to make probably a higher high to break the magic Fibbo to head toward probably this 25 and change area up here, maybe 25.8, 26. I want to see a run, whether we get the dip first and then the run, or we just kind of chop and hold and grind, get above the magic Fibbo, come back and retest it, grind into May, then go into the fall, get that push lower, then the end of the year, Santa Claus rally into maybe early next year. And I do think we're going to hit all-time highs before this is done. And we have some targets out there as well. So I got to kind of compress this, show you what that looks like. This 27, 28-ish thousand range is somewhat conservative. If we get the bigger degree, like we get that weekly retracement we're talking about, where that dotted line is, that's that weekly bounce. Then we could potentially see 30,000, maybe 30 in the mid 30s. And if it really gets out of control, push toward 36. All I know is if we get way up here and I see the barometer 80, 90%, whether we're here and it's 80, 90%, or it's pushing 90 and above and we're way up here, that's even better to look for the Elizabeth, I'm coming to join you, massive correction into, say, mid-year, early next year. We'll see. Don't have the perfect timing. So in closing, don't see us breaking out to all-time highs yet. I see us making a run in April and May to a lower high, then push into the fall to a lower low. The question is, do we go 3-day magic Fibbo, right? Which we came pretty close on that one, but just not quite. Do we reach that to go, or do we do the weekly retracement, which is the next level, that bigger circle here? Then we go blasting off into late year, early next year, but we're definitely going to get all-time new highs before it's done. And we know what to look for, whether we're here or there and anywhere up in the higher, more extremes, or this more conservative target, is those barometers at 80, 90 for all of them. Then we know the big one's coming. Fair enough. And the Russell still have some upside targets. I definitely think we're going to 3,100, 3,000, 3,100. That's a high probability target, kind of like the 130, 140 years from now for the dollar index. I definitely think we're going up here. The question is, do we get a bigger retracement on the weekly and get up there? Or does this thing go breaking out first and then pull back down? So two hot levels is 3,100 and 2,100. The question is, do we break down to that 2,100 zone first to go up, or do we go ripping into it, then we get it? But be careful on this one. This one is a little bit different than everybody else because we have been a lot more bullish on small caps, and we're certainly holding that breakout zone. We've been testing and still holding. So if we break below this 24, we're going to make a move down toward 21, where these extensions are, making a lower low, or we hold, we break this resistance zone, then it sets the tone 27, 28, probably pushing that 3,000. All right. So definitely going 3,000, 3,100. Even if we make lower low, then we do it, we're still going up there. Got it? All right. So what do I suspect? April, May will kind of chop and grind into probably a lower high, somewhere in that zone, test this up here, then go pushing lower into the fall, then blasting off. But this one, again, is a little bit different. It not only broke out, retested, but it's been holding the latest one, and it's been back testing that hold, and it's holding so far, which if we can climb now, it's not that many more points, a couple of 100 points on the big one, few points on the IWM, that could set the tone for a breakout earlier. But this is definitely a high probability target. I look at the Nikkei. Well, why do you do that? That's global liquidity. I think this is the same between this recent correction. We're going to get a retracement into the zone, and then we're going to get a bigger push into the fall. So April, May will chop and grind and grunt and labor to get up here. Sometime around Mayish, we should be in this zone up here, failing to then make a lower low in a bigger A, B, C type of correction. That'll put us probably fall, September, October, somewhere around there. Then we look for October, November, December, Santa Claus rally, maybe into the first quarter. We go blasting off to a bubble hunt on this one. And the only reason why I look at this is global liquidity. We pegged this when it ran up for the correction to come back down. Even talked about reaching the magic Fibbo, exactly where we went to. And based on this corrective move, this does not look complete, ready to go breaking out. This looks like we need this A, B, C to complete this bigger move. Then we can go blasting off. How much lower did we go? Well, maybe we get even a, believe it or not, they're all lining up perfectly with that 618, 786 magic Fibbo on a weekly chart. And from the low to the high, we get that perfect 618, 786 type of zone. That could set up the stratosphere potentially. But I'm still looking for the lower high into April, May, lower low into the fall, higher high into end of the year / early next year. All right, let's continue. What about black gold Texas tea? This is very important. This is suggesting we're going breaking out again. Kind of warned you, this thing could go tumbling and make a lower low unless what? Rockets keep flying and this inevitable move and stubbornness. The Hormuz is still closed. And don't get me started on this. People in the United States, it's a crime that our gas prices are going higher. We don't get a drip of oil. We don't need a drip coming through the Strait of Hormuz. Not zero. You go with the old saying, supply and demand. You have limited supply, the demand is high, prices are going to go soaring. Well, that fits China, Japan, Korea's over there, everybody that relies on that oil going through the Strait of Hormuz. That's not us. We don't need it. Then you look at our drill, baby, drill. We're producing more oil and gas at this juncture, more than Russia and Saudi Arabia combined, ×2. And we're going to have that ×3. Then you throw in Venezuelan oil. We're getting millions of barrels of that has not only been received, it's in the distribution process going through all the southeast corridor where all those refineries specialize in that dirty crude coming out of Venezuela, all the way from Texas down to Louisiana, et cetera. There are multiple refineries in there, and they are just rocking it. So we have more supply than we have ever had. Why is our gas prices going higher? Remember, supply is not decreased one iota. It's the market makers doing it. They need to be penalized for that. I can see in China and other areas, Russia, they make their own, but even then they get other oil from through the Strait of Hormuz. Yeah, prices should go up when supply is interrupted. But the United States, our supply is greater than it's ever been. And our prices are going up. That's a crime. That should be met with some serious sanctions or something, because market makers should not penalize all of us filling tanks of gas when it's not about the supply. We got more supply than ever. Prices should be coming down. I digress, but you get the point. So based on this price action, we cleared the hurdle. We're should likely next 125, 130, 150. These are high probability targets. So I would not be shorting black gold right now. Yes, it's a danger because all I got to do is say Strait of Hormuz is wide open and this thing can go plummeting just on a tweet or an announcement of it. But this price side suggests 75% we're going to 125, 70 plus we're going to 130, and this thing gets spicy. 150 is a logical target. 90% of that 1272 up there. High probability target is that 150. And the further this goes, the more inflationary pressure puts on our United States. And inflationary pressure is going to cause what? That could set the big market crisis to come too. So this is why all these things are kind of leading in the same direction. So this suggests we're going higher high. Be careful. You need to be aggressively taking profits and don't assume it's just going to go ripping every day, because all it takes is one tweet and this thing can go tumbling. All I can say is, and if we break 150, guess what's next? Sounds insane. 250 is in the horizon up here. There's no way oil can get to 250. Market makers can do that very easily. All I can say is, what if it does? What if, William Bruce, we actually get to $250 a barrel of oil? I'm going to buy as many as I can afford as SCO. When oil prices go crumbling, because there's no way they're going to sit up here at 250 for extended periods. And I'm not guaranteeing it's going to get that high. I just say it's a strategy. You see oil prices hit 200 and above, no buy, sell to hold, because I can't tell you what to do. I'm not a certified financial planner. I don't even play one on TV. But that's my strategy that's paid big dividends over my multi-decade career. When something gets out of whack and it's going to come back to reality, this SCO leverage product is going to go ripping higher when oil prices go dumping. Amen. So that is setting up a massive push higher initially. But once we get to these nosebleed sections, especially if we can push that 200, 250, that's a great opportunity to buy shares of this at very cheap dollars per share and look for this SCO to go ripping as oil prices start to come back down to reality. Got it? All righty. So are we going to go higher? We got the weekly candle close. We looked at the monthly. We're looking at last month. We didn't quite close above this resistance zone last month, but this month we're above it. But that weekly close, we already have it right at it. And then now this week, big important, if we can close above this week, sets the tone, 125, 130, 150. So there are your targets, 125, 130, 150. And if we blow past that, 250 is in the zip code. And again, if it gets up there, consider, no buy, sell to hold, but I personally am going to be buying hands over fist as many SCO shares as I can buy. And then when oil prices come back down to reality, these are going to go ripping higher. Amen. It's a little leverage product without using options. So it's not about the exact timing. You just use the leverage of that product and look for this to go much lower, especially the higher we go, the further we got to fall. And the further we got to fall when these things are dirt cheap are going to go ripping higher. All righty, let's continue. What about gold? Gold is kind of playing out. This is initial move down, A, B, and we expect further downside. So this was the A, the B, and we're still unfolding in C. Is this thing over here? It doesn't look complete. This looks like the 1, 2, 3, 4. Long as we stay below this prior level up here around that 5,000 range, the suggestion is we're going to make lower high, lower low. This does not look complete yet. Even though we did get a lower low, this latest structure does not look complete. It looks like it needs one more thrust lower. Amen. And the lower this goes, the more it sets up the next big run. Gold, I think the next big run is going to be 7,000, then 10,000 to the upside. Go way back. We have archives going back into 2011, where I kept them. I think even the older ones maybe I have somewhere, but those are accessible. And we made a bold statement way back when gold made a run toward 2000, it's 19 and change. I made a bold statement, everything but a prediction, that gold needed to go below 1,000, then it would reverse and go to 3,000 and higher. Way back here, said, look out, we're going to 1,000 before we bottom, and then we're going to go ripping to 3,000 and higher. We did that. Then expected to go up here to the extremes, almost 55, almost 6,000. Then exactly expressed that it would go that far, that fast. But this correction does not look over since the last push. I'd love to see a much bigger overreaction to the downside. That sets up this much bigger target up here. My friends, this target is extremely high probability. It's not a matter of days or weeks. Could take years, but I do think this latest correction is not over yet before it reverses and starts ripping higher again. So you drill down, and the reason I'm looking at that is price action. God-given talent to read and interpret price on a chart. I warned you when gold had this ripping the gold train was going to stop, and we're looking for about a 50% retracement on that. Somewhere in that neighborhood. We're looking for a decent size retracement. And if you look at that big run, it went up to almost 6,000. We pull back to the 4,000. That's a pretty steep retracement. When you look at this latest run from here let me use my 2.2, not a 3.2. But from this recent low to that high, we got a 618786 extreme retracement off of that. You come down here where we're just kind of gliding around. We still got a 618 retracement out of that. That's above 50%, right? That's what I said. When this was going to happen, we were due for about a 50% retracement at least. We got over 618 off of that. Is this over? Well, as I drill down, this looks like the finishing product of an A, a B. So what is this? That initial down move was the A wave. This chopping overlapping is the B wave. And this latest push is the C wave, and that's wave 1, wave 2, wave 3. We're correcting in wave 4, which will probably end maybe by the 14th, maybe the 28th. Could happen sooner, could be a little later. But somewhere in here, as long as we stay below that 5,000, we're going to get another thrust lower to a lower low. I targeted a long time when this baby ran. I was looking for this bigger correction to reach somewhere around 4,000 to 3,800. After price is doing this, this looks like it's incomplete and needs one more thrust lower. And it would put us right dab not only in the 4,000, but toward the lower end, that 37, 3,800 range. So that's what we're looking for. Be careful on any rally. As long as we're below 5,000, expect a lower high, followed by a lower low in a 1, 2, 3, 4, 5. Got it? What happens down here? Start looking for opportunities, because this sets the tone to then make a run. And again, I think it'll take a few years, but start push toward that 8, 9,000, 10,000, this big bubble up here. So pay me now, pay me later. James, Emil, all of our customers and future customers, we get the bigger retracement. We're going up here. We get the smaller retracement, and we just make a slight lower low. So we go maybe down to 39, 38. Still likely going up here. Even if we get an overreaction, which is even better, to get maybe down to mid 4s, below that toward that maybe 3,000 or so, something like that. Get a bigger retracement, still going up here. Got it? So be careful on any short-term rally. Look for this to make lower low. And then once we make a new low below the 4,000, pushing that 38, 37, that's probably not a bad idea to start nibbling on some of those ETFs or AGQ. There's many things we can play, or just buy straight up gold bars from Costco, because you'll get a lower price down in here. And then when you sell up here, you can talk maybe a double-ish. Again, get into 4,000 or lower, look for 8,000 and higher a matter of a few years later. All right. All righty. What about silver? Silver setting up potentially a move to 200. What? Silver at 200? You out of your mind? No. I think we're going to get a deeper flush. The deeper we flush, the more I like it. I'd like to see silver flush down, and I'm not necessarily thinking we'd get a weekly out of this, but if we did, sitting around that 40-ish range, right? I'd love to see that low to that high, a good retracement toward the weekly magic fibbo, push down about 40-ish, and then go ripping toward 200. That wouldn't be my initial target, 200, but I would start to target, let's just say we do that, we get this last flush down in here, and we push toward 50, maybe 60, 50, 40 would be probably the lowest we would go. But if we're anything near that, that would set the big extension toward the stratosphere, 150 to 200. Wow. That could be huge, especially if we're around 40, even $50. Get to 150, that's a triple. Big numbers. So I don't think the correction over. On silver, we talked about that. We went in, told you it was going at least to these targets. It did a little more, obviously. And then what? 50+% retracement. And the same thing with gold. You drill down on a daily. This thing doesn't look complete. This looks similar, that we're honoring the resistance level, and we got that 1, 2, 3, 4. So what do we need? 1, 2, 3, 4, 5. We need one more thrust. And what are some potential targets? 44. This initial move down and an equal move up. Got a nice, it didn't even, make the 618786 retracement, and we get an equal size move where wave A, right there, that's A coming down, equals roughly about there. That would equal this move lower, equality. So it puts us around that 44 area. This would be ideal. So we may not go that low, but this would be a perfect 1, 2, 3, 4, 5, push down at 50 to 40 range, and then set up a blast off into the stratosphere. Amen? So be careful on any rally. We have to clean up and break above that pink box to set the tone. We might test that to set the tone. We're breaking out to new highs, but that initial move does not look complete. And even with this slight lower low, like I was saying with gold, this looks like we got one more flush coming to do the bigger A, B, C to set the tone for the big run. And again, that run is going to push the 130, 150, potentially up to 200. Wow. High probability target way up here. No question. The question is, how much lower do we go? The lower we go, the more you salivate for the bigger run to come. So I don't think this silver train was over on this. I think it's going to end up with a 3-wave correction. And I don't think that that low right there, even though it's a lower low, is the end. It does look incomplete. We need one more flush. Then we can look at this thing going blasting off. And it'll probably take not just a few days or months, probably take a few years, but it's destined to go into the stratosphere. How cool is that? Let's continue. What about Bitcoin? I still think Bitcoin's going to run if all fits kind of to what we expect. Well, the bigger picture is Bitcoin's going down to 50/30,000. Today, tomorrow, next week, next month, probably in the fall. My target is somewhere around October, somewhere around there. So here's officially on this chart about October there. So I'm looking for whether we rally in April, May, like the markets, then we get a push lower into the fall, and then we start bottoming on Bitcoin. So what's the strategy? Again, no buy, sell to hold, but what is my strategy? Just like I told you back in 2022, right here, made some bold, everything but predictions. When Bitcoin was below 20,000, I begged, I shouted, I screamed, I did everything but predict. We were going to make a run toward 150. Buying Bitcoin below 20,000 is a steal of a deal. It is like committing a crime that you're able to buy it that low. And sure enough, it made a run. And I apologize, it didn't quite reach my 150 target. It went to 126 and change. So would you be upset buying at 20 and lower to go to 120 and higher? I don't think so. What's next? We're going to 50 to 30. We get to 50, start to nibble. Whether you buy Bitcoin, I'm doing both. I'm going to buy some Bitcoin in my ETFs, however I can buy them, and in different accounts. And then I'm going to buy some IBIT or some of these leverage products. I don't care how you do it. Opportunity is to nibble at these lows at 50. It goes lower, add more. It gets anywhere near 30. That is like go smorgasbord and munch down, because that's going to be this down here, lows, and then we hold, go back in the rhythm. Every 4 years, there's a Bitcoin halving. 12 to 18 months post-halving, Bitcoin makes a big run for 12 to 18 months. Then you get a pullback in the crypto winter. The next halving comes out. It rallies kind of in toward that point. Then we go 12 to 18 month run, big retracement, crypto winter low, starts grinding into the next halving, 12 to 18 month run, big retracement, hit our zone. When it hit there, I was like, this is opportunity. Went up 12 to 18 months, topped out. And you notice the highs and the lows is like clockwork. Way back. This high, that high, that high. That was 25. This was 21. This was 17. This over here where you can't see much, it just looked like a flat line. But the peak of that was right at 13. So we topped out in 13, 17, 21, 25. So what does that tell us the next peak out's going to be? 29. So sometime, say fall of 29, September, October, somewhere around the fall of 29 is going to be where we top out this next section. Our next halving is roughly May of 28. We're going to get a 12 to 18 month run into 2029, late 29. Then we're going to look for the next crypto winter and the next halving in 32. Rinse and repeat, rinse and repeat. Got it? So, how? Anybody? Look to buy when we hit 50,000. Look to buy more when we hit 40,000. If we go to 30, that's when you really should taking advantage like we did here at 20,000. And we're expecting this thing to make a run. When we finally get the low from the high, we'll be able to give you specific targets, but I would say it's going to be, I'm pushing for 200,000 and up. So we get it at 50. That's like a 4X. From 50, double it to 100, double that to 200. Upper ones to 200s or higher. That's kind of what that big deal says. Come having 12 to 18 month run into 2029, August, September, October-ish, we should be somewhere around the 200s. Now, in the short term, is Bitcoin going to rally maybe April and May? It's possible. That this looks like the beginning of an A, B, and we're starting on a 1, 2, 3, 4, 5, come up in the April, May. Then we start coming down into the fall and we get out 50 to 30,000. Well, it doesn't have to play out exactly like that. All I know is, I think in my humble opinion, we're going to hit 50 to 30,000 range. So whether this thing plummets to 50,000 tomorrow, I'm buying. If it plummets and it rallies up here, then plummets down here to 50,000, I'm buying. Or it goes and pushes even lower to 40, I'm buying more. And it pushes toward 30. I don't think we're going to go any lower than 30, and I'm not guaranteeing it's going to hit 30. All I can say is if it hits 30, that's a perfect time to really look to add to your positions for this thing to go blasting off. When? 12 to 18 months post May of 2028, which is over here on the right. So I got to go like to a weekly chart to show it. So this is the plan, rinse and repeat, buy in this bubble, hold it for 3 years until we get toward late 29, and we should be somewhere at 200,000 or higher. And then we'll look for the next cycle, come down into, just like I was showing where we topped out, 13, 17, 21, 25. We bottom 22, 18, every 4 years, right? 22 is the last one. You come down and use your little cursor, I guess we can use on this. And that low over here was roughly right around there, 18, 22. What are we bottoming? 26. What are we in? 26. We're not down to that target yet. And then what? We rally to 29. Then we look for the next pullback in what? 2030. And we look to rinse and repeat. But this has been ebb and flow of this market has been spot on. And the targets, the scenario, and please forgive me, I really thought we'd get to 150. But where did we end? exactly 18 months post-halving. Boom. So I knew when it was up there, it was definitely time to take profits. That was pushing the envelope. Yes, it could have pulled back and went more, but I just hold and do the cycle. So I'm going to what? Buy in 26, late 26, and I'm going to hold until mid to late 29. Expect price to be somewhere in the stratosphere of 100,000, pushing 200 or higher. Amen? That's the plan. And there's many ways to trade. You can buy ETFs, you can buy Bitcoin. I'm going to do a little bit of all the above. If you want a little extra leverage, you can buy some of these pro shares that are leverage involved and look for these things to go ripping, but yet they're going lower now. So I would not be loading up on these yet because I do think we're going to 50,000 and lower. Once we hit 50, nibble. We go to 40, add. We go to 30, get on your knees, like I told you over here when it was 20, below 20. Said this is the perfect time to get on your knees and thank you for the opportunity to be able to get involved. So we can push 40, that's me time. 30, that's look to the heavens and go, thank you. And just hold it. If you don't too much volatility, don't look at it. Just start closing your eyes and then wait till we get to mid to late 29 and see where we are, and then take your profits, hold your money, and then rebuy down in 2030. Rinse and repeat, rinse and repeat, rinse and repeat. So let's circle those wagons. Whether you like SPX, you like ES, you like SPY, we're still looking for what we believe, Harold, is this reversal. We should grind higher to a lower high. So no matter what I look at, that's a daily chart, kind of condensed, we got the series of lower highs. We talked about from that recent low over here, this chopping overlap, we were due to get a lower low. We got that. I do think we're going to grind higher April into May in a chopping, overlapping, just grinding, gnarly looking kind of price action. But I do think we're going to grind above the magic fibbo and start pushing what appears to be a breakout, but fail, and maybe May, and then start pushing lower into the fall where we get a new swing point low and we push into fall. And then don't pay attention to what I'm doing here because it's not exact. And then we get into the year rally and we push all-time highs and we go to extensions. And we'll look for what? Simple way to do it. We just use the all-time high. One of these kind of triple topped up here, but you use the all-time high. And again, I don't think this is the low that we're breaking out from. So we'll go up and grind April, May, then we get a lower low. And let's say we come down to somewhere around that 600, maybe upper fives, and we get that retracement. Then we'll have a high and a low coming into maybe fall, and then we can look for what? Well, first thing we got to do from the high to the low is break the 618. So once we do that, it sets the tone. We go into some extensions, and you can see these extensions up here. If that's the high, that's the low. We'll start looking for extensions up here around 710, 721. Maybe push the envelope, go up towards 750. Maybe we go crazy into the stratosphere and hit 800. We'll see. But once we get to the stratosphere, whether we're doing SPY, ES, etc., conservative target, if we do the extension where we bounce off the magic fibbo on the weekly, could even set up to the mid 8s or even 9. And if we get here and we're 80, 90% of that bar chart heat map, and all of them match, the Dow, the S&P, the NASDAQ, the Russell, they're all pushing 80, 90, and we're in this zone. Look out below. If not, and we're pushing to further extreme, look out below and take your profits. But in the interim, I don't think this bounce is going to manifest into all-time highs yet. I think it's going to fizzle into April, May, kind of rally up there, chopping, overlapping, grind, push lower into fall. I'd love to see it push to extreme low, which is that weekly magic fibbo, get that combo meal bounce. and set up potentially some stratospheric type of targets with initial target here. And again, we get here and it's 80, 90% on the Dow, 80, 90% on the S&P 500, 80, 90% on the Russell, 80, 90% on the, what am I forgetting? NASDAQ, and they're all up there, then we're probably not going extremes. If we don't retrace down to the weekly magic fibbo, we're probably not going up here. So this is a conservative target, but might be the extreme target depending on how far we correct going into the fall. If we can bounce off that 618/magic fibbo weekly, then it does set the tone for the bigger move. If we don't retrace that far, when we go, this would be the target, but regardless, we get the perfect weekly bounce and we get up to this target and we're pushing 80, 90 on the Dow, S&P, NASDAQ, Russell, especially pushing 90 on that heat map, look out below. So I'll take aggressive profits there. If we hit this and pushing higher and we're still not there, whenever we are and we're up in this zone, then I'm going to do the same. Take profits, get out. When everybody's buying at the top, we'll be taking profits and looking to buy all our earnings down in the lows. When it plays out, then we'll rinse and repeat. Amen? So look where the weekly is, sitting down here. So we're going to get that big move. And then notice, say we get up here to the extreme, and then we do, Elizabeth, I'm coming to join you, honey. And what is this down here? That's the monthly magic fibbo. So what if this is Elizabeth, I'm coming to join you, honey, and we get the crash, the big one, and then we look for somewhere, we'll be able to tell you what a bottom looks like based on price action. We'll give you initial targets. Then when you get that new all-time high down to the whatever this low is, post-crash, then we'll look for 618 break. Then we'll look for extensions, et cetera, et cetera. So we'll guide you, which we've been doing. God-given talent to read and interpret price. That goes across the board. So NASDAQ, same type of thing. Do we get the weekly retracement when we're done? I think it's going to chop and grind higher April and May. Come into the fall, get the bigger retracement, whether we reach it or not. Ideally, I'd love to see it. Bounce off of that, get the combo. Could set up the stratosphere into the 30,000s, maybe extreme mid-30s. Sounds insane, but we're looking for this 27, 28, 29 as a conservative target. Again, what happens when we bounce and we get up there? Then we what? If it's pushing 80, 90% on the NASDAQ, 80, 90% on the Dow, 80, 90% on S&P, et cetera, rinse and repeat. Then we look to take profits. Even if we push higher and when we take in profit, I'm not concerned because that move up is going to be substantial. We'll be able to give some insight. All right. So that's the market in a quick review. Same thing with IWM. We looked at the Russell itself, but this is IWM. We're talking minimum conservator somewhere around that 300, 310 area. And then we're looking potentially this thing could go into the mid threes, 30s, 50. We shall see. But I do think this is extremely high probability target. The question is, do we retrace, rally to a lower high, lower low into the fall, then go blasting off into the year, into first quarter? It depends if we get the perfect bounce. But if we do get the perfect bounce where we do that weekly style retracement to the magic fibbo, then you can see what these numbers look like. 316, pushing potentially towards 370, 340 in the middle. So I know there's a lot of numbers on here, but that low to that high, perfect 618 bounce combo / magic fibbo bounce, that sets the tone for an equal move higher would be 316. So that move up correction, equal move would be 316 right there. And then typically if it does that perfect combo, it can push toward a 1618, which would be 370. Wow. That's quite the move down here from say 220 up to 320, 370. That's big. Amen. All righty. So that's the plan. Chop and grind, probably grind towards upwards in April, May. This one could make all-time highs. If anyone's going to make an all-time high as we go into April, May, would be this one, but it still probably may follow suit, lower high, lower low. Then the big end of the year Santa Claus rally into maybe next year. But these are high probability targets, and we'll see how they play out. And that's the plan. Circle the wagons back with the dollar index. Be careful. Again, I think there is more downside that needs to finish this pattern. Yes, it could be the end and we go blasting off. But like I showed you, we have a higher probability we're going lower low than we're going higher high right now. Yes, my 130, 140 target is extremely high probability, but this latest little correction in this, we're stuck between resistance, 618786, the high to the low. That's resistance. And from the recent low to high, we're stuck between 618786, which is this green box. We're stuck in between here. So we break above, we're going higher. We break below, we're going lower. And we went through all this, so please review the recording. But this suggests this looks like the A, this looks like a little B. We still need a C. At least come toward the magic Fibbo. We could potentially bounce there, or we could absolutely break below. We close below the magic Fibbo. We're going to go down here to the support box, which is a little bit lower, which is that bigger move, right? Low, high, 618786 retracement. So how we break below this magic Fibbo and close with the candle body, we're likely going to make a move down here. We could bounce up there like we did over here. We had the initial move up. We got a perfect 618 bounce. This rally to a 618, and then we got, actually it's a little bit further back. We got the lower low, this one right here. Perfect 618 bounce up. From that high to that low, we got a perfect 618 retracement. And then we went lower low like we called for. So even though this plays out this way, that we correct down, we don't hold, we bounce off of this and go up, then this high to this low is going to be critical. You look for your 618 back up like this one. And if we fail, then we go lower low. So even though this comes down here and bounces and it looks like, woo, it's ready to go breaking out, and it fails at that 618786 resistance zone, it suggests we're going lower low. By going lower low, that's this high to that, says we're going lower low below there. This is higher probability this way than a breakout, even though I'm telling you, even if we don't do this or we do this and even go lower than this, the target up here in the stratosphere, and I guess I got to go out to 3-day to show it to you and stretch it out. The target is this 130, 140 area, which is up here, 130, 140. And I believe it's just first, yeah, there it is, 130, 140. So pay me now, pay me later. Whether we get the kerplunky or even much deeper, we're still going here. We're breaking out from here, we're going there. We get a slight lower low, we get this, we're going up there. So all roads lead to this thing going much higher, but I'm not convinced that this is the low right now and we're ready to blast off up here. Even though I'm extremely confident we're going there, we probably need at least one more flush, and maybe that continues a little bit more, but eventually it's going to reverse and go to that 130, 140 target. Amen? All righty. And what else? Throw a couple of these in. I'm still looking at my opportunity for Meta and its leverage product METU to go ripping higher into the early, Santa Claus rally, maybe early next year. And I think this is going to kind of do what the markets do. And that is we're probably grunt April into May, get some sort of lower high somewhere off of these trend lines. Somewhere it looks like it's going to break out, but it's not quite going to do it. And this will get that lower high. We get maybe a lower low into the fall, then go blasting off. But the long-term target is 1,100 to 1,300. This will probably be a few years out. I'm not trying to convince and say that I think we're definitely going here, But this may not be rally into April, May, get a low into the fall and go blasting off into early next year. We're looking for some of these targets higher up, 700s, maybe 800, but I don't think we're going to reach 1100 to 1300 by end of the year, first quarter type of thing. I do think we will go to all-time highs based on that, but I do think we got more upside as we get into late fall into the end of the year. But this is a longer term target, probably a few years out. So the plan is to own shares of METU. I've nibbled. If we go any lower, like 18 or lower, I'm going to add some more. It goes to 16, I'm going to add more. Goes to 12, I'm going to add more. And I'm looking for this thing to run. Even if we just get a 618 retracement out of that, we're talking pretty significant double from the 1816 into the mid 30s for a 618 retracement. And eventually, when we reach that 1100 to 1300 target, we're probably going to be somewhere in the extensions up here in the $50 range. I like it. And that goes for Amazon and AMZU, Meta with METU, Tesla with TSLL. What do we say about this? Back in October of last in 24, when TSLL was below $10, made a bold statement. Tesla was going to make a run toward 500, and it did it, and it's made right at it. And this went zooming from below 10 up to 40 plus, 41.50. Not bad. So buy low, sell high, bought low in the $6 range, sold high here, nibbling again for the next run. And I do think it's coming sooner than later, but no later than later, but it's on the market's house's money. And if you come over here, I think I got one open. Do I? Maybe not. I guess it's in this one. And you come back here where we expect to chop up and down to a lower high. Then we get the dip. Then we go all-time highs. I said expect the market bounce to be short-lived. So that's what I mean by lower high. Not expected this rally to make an all-time high, as we've been discussing. But that Tesla call, easy way to do this with all our archives, is you do Control F, get the find box, and you type in TSLL, and you'll see that we come back into October of 24 when I made that statement right there, October 24th, which is right here. Boom. Expect Tesla to hit 500, consider TSLL trade. I can't tell you what to do, but we said that it was below $10 and it went to 41.50 as Tesla made its run toward 500. And I expect Tesla's going to make another run eventually, and it dripped into our zone where I think we're ultimately going to go, and we dipped even lower when we started getting below 15, and it bottomed at $6. I loaded up, and then when it went up to $24, I mean, you got to take some profits, right, Harold? Double, triple, quadruple your investment. You can't just sit there on that and look at it. So you take profits. So again, I'm looking for that. We got some Coinbase trades in it. We got a lot of things in here that played out beautifully. So in closing, take one day at a time, one trade at a time. I'm humbled and honored to be your mentor and instructor. And I'd like to wish everyone much success today, tomorrow, and into the future. I hope you all had a beautiful, relaxing Easter weekend, and looking forward to a lot of opportunities that are setting up. And again, I do think be careful with the markets because they're going to grind and grunt. So be in aggressive profit-taking mode. And then when we get the lower high, lower low, probably into the fall, that would be a good time for look for a big rip going into the end of the year, first quarter, and we'll rinse and repeat. But all these we set up, this is back in October, right there. There it is, October 24th on that wick, right there. 18th, 24th, 3rd, 4th, kind of got it because I'm on a 3-day, so I need to get to my daily. But you can see it was in the archive, and we talked about it on the 24th when we were right there below $10. And I said, consider it. Boom. Then we got this low, said the same thing, consider it. It quadrupled from like $6 to 24-ish bucks. And now we're saying, yep, this could go lower, but we're looking for that end of the year rally in the first quarter. And what if Tesla goes below 200 a share? Just to throw this out, I think SpaceX is going to combine and buy them out into one company. I'm not saying Tesla is going below 200, but this thing is still setting up low, high, higher, low, holding the zone, looking for that bounce. And even if it's just one of these where we get the end of the year rally and Tesla runs toward 550, 650 zone, and we simply get a retracement toward the 618786, you're talking single digits into double digits, which is like a double. And if it explodes like we're talking about, Tesla makes a run to 700, 800 or higher, this thing can blow off into the extensions up here. And imagine buying it again below 10 bucks and getting it somewhere at 40, 50 bucks. Rinse and repeat, rinse and repeat, rinse and repeat. Take care. God bless you. I'm humbled and honored to be your mentor and instructor. Join us again tomorrow. That's it. That's all.